Let's get back to the payment for order flow debate. Get the other side of this all. Joining us now is Doug Sifu, the CEO of Virtu Financial. Payment for order flow is a part of your business, Doug.
Yep.
What are you paying for?
Well, I just want to, commend Ms. Baer because, she's a very, very talented, smart person. But the marketplace she's describing really is 1995. I mean, the ideal marketplace that she described, where brokers are routing solely based on best price and wholesalers are competing solely on best price, is the marketplace that exists today. So, her facts are just inaccurate. She, I'm sure, writes wonderful children's books. I don't want to disparage her. I think she's incredibly intelligent and she served this country terrifically, but she just has not kept up with advancement in the marketplace. So not a single retail broker that takes payment for order flow will route based on the amount of payment. They're routing to the wholesalers solely based on the best price that we are competing for. So as Guy said, we have a system today where retail investors for zero commission can get a price that is at or better than they can get on any of the stock exchanges, and the aggregate amount of price improvement that we provided as an industry in 2020 was approximately $11 billion, right? So we should all be proud of that. The execution that a retail client gets today is frankly better than what any institutional client could get in the United States. So with all due respect to Ms. Baer, who is a terrific public servant, she's really just out of her depth here.
There will be some out there, Doug, who argue that best price is set based on the NBBO, and that price is distorted because so much volume is traded off exchange. The NBBO price is set on public exchanges or lit exchanges, but 47% of total volume goes off exchange. So how can we know what that best price is when so much is traded off that lit exchange?
Yeah, the other factual error that she had is every time we fill as a wholesaler, every time there's an off-exchange trade, there's an immediate print to the marketplace, right? So the market knows what the sub-penny pricing would be. So there's no information asymmetry to the wholesaler. If anything, it works in reverse. We sit there prepared. We've got bids and offers in 8,000 Reg NMS names, individual companies and ETFs, and we have to take the flow. So she's just factually incorrect. We don't have a choice. We don't cherry pick it. We don't route it to an exchange. We are contractually obligated to price improve and provide filled execution on every single order that hits our environment, right? So at the end of the day, if folks want to come up with a different metric for us to price improve off of, we're happy to do that. The NBBO today is the only agreed upon metric. People say it doesn't include odd lots. Include odd lots, tighten it up. Still, the value provided by wholesalers is unique, and we should be very proud of the service that we provide, and that the environment and the execution quality that retail clients have in this country, frankly, is unparalleled. I don't know where she's coming from. I don't know, who's really complaining about this. Retail clients have zero commission trading to get better prices than the institutions. The institutional clients that we represent, that are our clients, they're not really complaining about it either. So I don't know who's the plaintiff here. Who's really the person making the complaint? Who's behind all of this, controversy? There really isn't a controversy. When you look at the facts and data, there is no doubt that this is the best marketplace in the world.
Doug, there's an army of people on Twitter. I'm not saying that these people should be the arbiters or final arbiters of whether or not the system is fair, but there is a perception that this system is fair. And in certain shares where the bulk of the volume of the shares they don't go to lit exchanges, they're going to wholesalers, like, let's just throw it out, an AMC, that there's a perception that they are really not getting the best price because it's so distorted, that NBBO is so distorted because so much of that volume of that share goes off exchange. Can you address that? Or is there some shares where pricing is more distorted than others?
Sure. Obviously, there are stocks that are more of interest to retail investors, and so you're going to have more of that sent by the retail brokers to wholesalers. There are approximately 200 retail brokers, wealth managers in this country. About 10 of them take payment for order flow. The other 190 do not. And they still send their orders to a wholesaler. Why? They don't have an economic interest. There's no inherent conflict, as she alleges. They send it because of the segmentation of that order flow. Ironically, all of the folks that you just mentioned that are complaining, they're actually getting better execution than an institutional client that's going to pay us a commission that doesn't get any price improvement. So the retail folks that are watching this, you're getting better execution with immediacy, with a full print to the tape, than as compared to any institutional investor in this country. So I get it. It's a political pinata right now. It's very easy to say dark pools and Robinhood and Citadel and all this stuff happened. But when you dig down and you look at the facts and you look at the data, and that's what sensible regulators have done in this country for the last 30 years, every time they have looked at this practice and looked at the ecosystem, they concluded it inures to the benefit of the retail investors. And there's not another system in this world, frankly, that is as beneficial to retail as the United States. I will debate anybody with that publicly. We've been 100% transparent with the data. It's all out there. We're a public company. We're very proud of the service we provide.
Have you talked to Gary Gensler, and do you think that he's, off base when he says that banning payment for order flow is on the table?
No, I mean, it's his table. Right. So he's not off base, and he's a brilliant man. He's a very smart guy. We're scheduled to speak with him, I believe, next week. We've spoken to dozens of folks on Capitol Hill. We've spoken to all the commissioners. We've spoken to the staff. We've provided reams of data. Virtu is all about transparency, and we're happy to be an intelligent part of this discussion. The SEC has historically always reacted to facts and to data. The facts here are compelling. $11 billion of price improvement. Right. Immediacy around execution, 100% transparency, no information advantage. When you lay all those facts on the table and you get rid of the histrionics that Sheila Bair is throwing out there, and you look at facts, it is so compelling. The notion that you would change that system because of some innuendo or rumor, to me, is just absurd. That's the word I used on Twitter.
Histrionics is a strong term, Doug. One last question, and that is, if payment for order flow is banned, what happens with your company? I mean, what happens?
I mean, ironically, it's an expense.
To earnings,
right?
to anything.
Right, it's an expense. So, like, in theory, like, our bottom line would improve. So you may say to yourself, why are we doing this? Because I think it's the right thing. I think payment for order flow has created innovation and has enabled a company like Robinhood, which is a client of ours, to offer commission-free trading and to democratize the market and make trading more available, more openly available. I believe in that passionately. I believe in what we have done with them. So from a Virtu perspective, our earnings would probably go up. So sure, I have an interest in this. Robinhood is a client, or other clients that take payment for order flow. We have another 190 retail clients that don't take a penny of payment for order flow, and they continue to use our services. Again, when you look at the facts and you get past the histrionics, I'll use the strong word again, and the innuendo and the rumors, she doesn't present a single piece of data behind anything that she just said. All I have is data, and all I have are the facts, and they are compelling.
Doug, thanks so much for joining us. Great
Thanks. Appreciate the time.
Doug
Pleasure.
Cifu of Virtu Financial. Pete, what's your take?
I find myself on the side with Doug. As a former market maker, I stood on the trading floors in Chicago for a long time, Mel, as you know, and I got to tell you something. I think he's right. It is the data, and we're not talking about 1995. I mean, we have progressed and things have changed, and the speed of the markets is why we trade the kinds of volumes that he's talking about, $11 billion. I mean, when we talk about this day in and day out, and I see what he's saying about this, where is the data, and show us how we are doing something that is in any way illegal or somehow ripping off the customer. I think he makes great points, and I have to agree 100%. It's why, however, I left the trading floors, because the speed of the game and everything else, it turned into a far more digital type of world, because you no longer could stand down there. You can't compete with what's going on with companies like Virtu.
Yeah. Karen?
So I know we goodbyed the guests, but I think your question was really at the heart of the matter. What happens if that goes away? And I found it a little hard to believe. Please, I want to know the answer if my supposition here is wrong. He said, okay, a cost of his would go away, but clearly some revenue somewhere, right? Some benefit would go away. I don't think he's buying that just for cost. So what is the revenue from that? So how do they make money? How much money do they make off that? I'd be interested to know. I'm not saying people shouldn't make money off a business, but it seems like they wouldn't buy the order flow if it weren't valuable somehow. How valuable is it?
It's not a charity. Virtu Financial is not a charity, Guy Adami. They're not doing it out of the goodness of their own hearts. Nor should it be. But to say they think it's the right thing to do, Guy, do you buy that? They do it just because it's the right thing to do.
Listen, I'm 100%, and I got no horse in this race, but I'm 100% with Doug on this. I thought he came and he acquitted himself extraordinarily well, and listen, Sheila Bair is brilliant. I think a lot of what's going on here is absolutely political. It really resonates with a large part of the audience that might not understand some of the nuances of what's going on here. The playing field, I'll say it again for the 100th time, has never been more level for the retail investor, and that's for a lot of different reasons. So, you know, I think Doug is a gentleman for coming on. I thought he made excellent points, and I'll say it again. We're looking at the wrong thing. I'll say this again. You should be looking at what's going on with people that are allowed to trade in positions where, quite frankly, they shouldn't be allowed to trade. You want to talk about a rigged game? There's your rigged game.